Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a strong impulse to the upside, followed by the correction. And at the moment, the market has just printed a new higher low. The previous low was here. A higher low has now been created. In a situation like this, more bullish continuation could be expected for the market to also print a new higher high, therefore breaking above this previous high and completing this impulse correction and impulse pattern to the upside. We can also notice that from a pattern standpoint, as we have this impulse and correction, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we had a perfect 0.618 Fibonacci retracement. The market tested its zone, and at the moment it is rejecting it to the upside, from which more bullish price action could be expected. Going down in the weekly time frame, what do we have? Now, if we look at the weekly time frame, we can see how by looking left, the market clearly had resistance at this zone. This previous resistance was turned support here after the market created this impulse and correction. Now, in creating this correction, once again, the market has given us another pattern and a correction after the impulse that if we want to measure, we have to take our Fibonacci once again from the low to the high. This shows how we essentially have just tested here the confluence of support that we had inside of this zone, because inside of here, we had both the 50% 0.618 retracement and this previous structure resistance turned support. So we had three support levels all lining up at the same level of price. This creates confluence of support from which a rejection to the upside is very likely, which is in fact exactly what the market is doing. And in a situation like this, we could expect more bullish continuation. Going down on the daily time frame, what do we have? Now, from a daily perspective, it is quite clear how we just got this very strong impulse. Also here, the drill is the same. If you have an impulse, you expect correction and then the continuation to the upside with the creation of a higher high. We can also notice how by looking left, during all this impulse to the downside, there is this level here at which the market created this green candle. This shows how even though this market was very bearish and sellers were in control, anyway, buyers started entering aggressively at this level, creating this green candle. So this is previous daily support, which is now once again support here. So what we could expect is for the market to reach this level, inside of which we could have more institutional buying, further increasing the probabilities of seeing the continuation to the upside and for the market to complete this daily impulse correction and impulse pattern to the upside. Now, why do I say that there is a good probability to see more institutional buying inside of this zone? Because if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the AUD, the first thing that we have to keep in mind is that if we're checking the data for the AUD, we are actually already checking AUD USD because all currencies on the spot are traded against the USD. And if we do that, what we can see is that with the last reports, we went from minus 61k net positions up to minus 45k net positions, showing how institutions have been moving to the bullish side for the AUD, meaning to the bullish side for AUD USD. So clearly, as they're moving to the bullish side, this increases the probabilities that a correction to the support area could lead to more essentially longing of AUD USD from an institutional perspective that at that point would increase the probabilities of seeing a rejection to the upside. So if we get a retest of this level, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, you can get a full refund of the mentorship program price after you join the program if you open an account with them directly in your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description. At least you're supposed to go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.